Good morning, everybody. Hope you're doing well. What a few days it has been in our stock market. Let's go ahead and get started. Good to see a bunch of people in here right at the start. Guys, welcome to the Hurley Investments Trade Findings and Adjustments of May 13th, 2021. So today, I don't have a trade for you. I don't think that makes sense to shoot off a trade just for the sake of shooting off a trade. Like Kevin said Tuesday night, it makes more sense to look at protection. Just because our market is, again, as Kevin said Tuesday night, is acting sentimental. And that's a nice way for saying emotional and hasn't got a damn clue what is going on and what there is to expect. So, take a look at this chart. It does look like we're having a bounce day on the 50-day. Get a little highlighter here. 50-day and S1 pivot point didn't quite bounce on it or touch it. Got close. Touched to the penny this pivot point up here. What is that? The P. And as of right now, looking difficult for it to get above that, which is also yesterday's close, yesterday's open up there. If I can zoom in a little bit, 41.30. Being a Thursday morning, I kind of feel like nobody wants to be in the market over the weekend, and Friday we'll probably see a reversal back at least to test the 50-day and give us somewhat of a head fake. If it doesn't do that, it makes sense to be patient and to look for confirmation of a true bounce there at the 50-day. Kind of hope and wished it would have gone down and actually touched it rather than almost. Something more like what you see down here or over here. Even though a couple days here in March it fell below it, or right here. Some things I'd rather see to feel more comfortable taking a look at possibly removing protection for some profits on some positions, and for things that we still need to have protection on because they're technically bearish or still haven't had their earnings yet, rolling the protection we have down for a profit and going a little further out in time to buy at the money puts. Example would be Disney today. Disney, I'm wanting to try to, where are you, Disney? Got an open order for Disney. Here's all of our, and it looks like it got filled. So this is an example of it actually filling. had an open order there for our 185. I think they were May 28th puts, if I remember right, off the top of my head from this morning, to roll those down to 180, close to where it was trading this morning. So took some profits, nice profits on 185 puts, rolled them down to 180. So we're set for earnings later this afternoon. We're good to go. What's another example? Baidu. Still waiting on their earnings next week, I believe the 18th. Man, we've got so many positions on Baidu. I mean, we scroll and scroll, still Baidu. It never ceases to amaze me. All right, so Baidu, where is our shares? We've got 215 puts that I would love to see rolled out for a little more time, and a little profit taken on those 215s to be at the money in case earnings finally convinces everybody that Baidu is worth buying and seeing it head up afterwards. So 215s and Baidu, take a look. Struggling at the 200-day to hold on. Now 1, 2, 3, 4 days could not get above 190 pivot point. 190.93, so we'll call it around 191, right? So that's where I'm going to be looking to, so excuse me, 181 is where I'm going to be looking to either today or tomorrow, whether we add, roll those 215s all the way down to 181. 180 is probably the strike price we'll have to go with, just out of curiosity. So June 4th, probably 180s or 182.50s. This is a credit, $26 is what we will profit. $8.50 to $9 of the 35-ish we would be selling these for goes into our June 4th 180 puts. I also might kind of push back with Kevin and see, hey, maybe we should look for more time. But we do have plenty of profit in those 215s, and I could also argue being just fine with June 4th. So those are some of the things that I'm looking at, and Kevin and I have been looking at and discussing and planning to do. So, okay, enough rambling a little bit. So as I've thought about some things to discuss and talk about, just in retrospect, looking at our market, looking at where our accounts are today, it's frustrating. Frustrating to see a period of time where we're not beating the market year to date. not understanding why our S&P has taken off like it has. Why our NASDAQ has absolutely stank. And the greedy part of me is wondering why on earth all of the stocks we have, which are not NASDAQ tech stocks like Apple, or, oh man, was that the same chart? Look at that. Same chart. Okay. Why Baidu goes all the way up as far as it does and just completely sucks for the last, we'll call it 3 months. So I try and look at, rather than just being emotional about it, rather than just looking at the difference in where we're at versus the market, needing to step back and really decide if we're doing something wrong, I'll say I'll need to take a chill pill and look back and see if we're doing something wrong or or you're hearing me pause. My silence is deafening. If I need to take a chill pill and look back and see if we're doing something wrong, or if I'm just being emotional. And usually it's this part. Usually some emotions are, some emotions are getting to you. If you're looking back and really trying to put things in perspective. So why are we so off? Well, first of all, it does make me feel better that we absolutely crushed the market last year. Not every point in that period were we beating things on the way up after our crash. There's periods of time that require some serious patience, and I'll be the first to admit that it's not easy. But, as I think through things, as I take a step back, guess what? A lot of what we have is in the tech sector. One of our biggest holdings is Apple. One of the biggest reasons we so handily beat the market last year was because of the performance of Apple. So our FANG stocks, our tech stocks this year, you can call it tech sector, your growth stocks aren't helping push the market higher like they have for some time now. All right, so much of what we have isn't contributing. We've had some things that have worked awesome. Some bank stocks, Bank of America, JP Morgan. Boeing's similar to, in some ways, to Baidu, up real big, down a lot. The good news with those two is for shares, we get an opportunity to add more, running up really big, falling down really quick. We get an opportunity to do what we do and add more shares for the potential that these stocks like Boeing and Baidu will run back up at some point and be the reason again why we beat the market later down the road. So back to this, our FANG stocks and tech sector are not helping. So what is, and by the way, something like an Apple that we've had, it's been so beneficial as people have, and I'll highlight this here. Every index fund, every mutual fund, every institutional investing firm, what have you, everyone was putting money into Apple for years. It was just a part of the portfolio, and along with those FANG stocks, I know we have an M in there for Microsoft, but whatever. So what happened after years of that going up, Apple especially, it then becomes those positions become too big for portfolios. And yes, I know that much of the reason for these stagnating is because inflation fears, but I'm even kind of stepping further back from that for a moment. So for a big position like we've had, it's a process that we have to deal with where we're putting some belief in not only some stocks we have that are still undervalued, that can still have the potential to double in the next year or two, but the belief also in our strategy and the belief in collar trading and adding shares to go higher. So I'll make a note, if we're not indexing the stock market, we won't always be following it closely. Periods like this last quarter make how do I want to say this? Periods like the last quarter make it difficult. I'll say frustrating. But I'll take periods like the last quarter if I can have a year like last year. So we're not indexing the market. We won't always be following it closely. And there's periods where that stinks. But in the long run, I'm happy we do it because it allows us to beat the stock market in the long term. And I'll add where we destroy the market over a longer period of time. Okay, so then what has worked? Let me give you guys a chance. Not necessarily saying what has worked for us. I kind of highlighted those bank stocks. But I mean, just in general, what has been pushing? Let me write that. So what has been up, pushing the market up through this year? If it isn't the tried and true apples and fangs and good portion of the tech sector and growth stocks, what are some things that have worked? both in our portfolios and just in general. What are some things in the market? Again, what has been pushing the market up like this to new highs? I'm not talking about economically or fiscally, whatever. I'm just talking about stocks. What do you guys think? Throw some things out. According to this article, let's see what they see. Applied materials. Citigroup. So that makes sense. Jim says pharmaceuticals. You're right. Pharmaceuticals have helped from the beginning of this year. Ida says IPOs. Some sectors like XLE. Yes. So let me just take some notes here. Pharmaceuticals. I'm just going to put Ida. I haven't looked at all the IPOs in the IPO market, but energy for sure. What else? So materials, banks. So we have the banks, don't have a lot of materials. Maybe we should have listened to what Warren Buffett was doing and done something with Exxon. That's worked through the year. Jim says housing, yes. Get to that. What are some other energies? MRO, flat for a few months, but up big for the year, doubled almost. Let's see, pretty much at one point doubled. CVX, just trying to think of some other same thing. Other energies, oils really. Housing, let's look at DHI up quite a bit from the year. I already showed you our banks. So materials for sure. So let's look forward. Let's just look forward for a little bit. So pharmaceuticals worked for the first quarter, right? So biopharma, these guys have basically gotten all of the government benefit to the vaccines, and now are kind of left on their own to try and sell this stuff. I kind of think we've missed the run for pharmaceuticals. IPOs, I have no interest in looking at IPOs, but certainly some IPOs have taken off. Again, I don't know altogether how that market has done. Energy, oil getting more expensive. You would think that that would be helpful with regard to inflation. But again, have we missed the run? Housing, I don't think can last forever. With taxes going up especially. And probably not much more than this year, if at all, past the end of this year, to see housing up. Banks. So a lot of people have gotten into the banks because of fear of, rising rates, which should help the banks. We're already in that, so we're good. Meant to do an exclamation point. So I guess what I'm saying is, looking across all of this stuff that has helped push our market up, and there's probably some more and better things that we could even list. I have to still take a step back and wonder, or at least ask, if we've missed those sectors, In a lot of these cases, I kind of feel like we have, especially when we think about and I'll say keep an eye on materials. I have to take a step back and I have to ask if we simply miss those sectors run up, or if there is more to go. In pretty much most of these cases, I like what we already have ourselves in, because they're value stocks that give us greater opportunity into the future at a longer period of time. So I'll say I have to look at the long term and decide if what we're in doesn't make sense for the long term, or if some of these others do. Let's see, and decide what makes sense with what stocks we have versus what could be better. My conclusion, again, I like where our long-term prospects are for our stocks. I don't like as much the long-term prospects of some of the stocks that have quote unquote worked over the last quarter. I kind of have to see it go into the future. Not to mention some of these things are not undervalued, they're overvalued, and I don't want to pay more for something and get less back. So I still like Apple. I still like Baidu. I still like Disney. I already said that. I don't need to repeat myself. I still like our long-term prospects in our stocks. All right, question coming in. Jim, what about battery-related industries and suppliers? There will be large efforts to meet all the green communities big companies are making. So something to think about, but that's also kind of a materials. I still think there's something to keep an eye on there. I guess what I'm saying is looking back, what has worked, what hasn't, and do we need to make adjustments? And my conclusion, Jim, is no, I like what we have. But if there's some new money to be putting to work, then I want to look at the long-term prospect of what is next that we can add. So materials is something like that. But I agree there will be efforts to meet the green commitments. That's more research. I guess to give you an answer, I'd have to look at. Good idea, something to think about for sure. Can't really give you an answer as to some thoughts that direction or what I would be doing there. Logistics. So logistics is already huge, Jim. Another one. Clear up there. Let me see. Fundamentals are all screwed up right now, but kind of a high PE for a logistics company. Low PE, kind of feel like that means that there isn't a lot to expect in forward earnings, in earnings down the road. Earnings per share this year, earnings per share next year, or earnings per share next 5 years. So I would chalk that, I think you're right, Jim, but I would chalk that up as kind of too hot of an industry and probably missed a lot of the run. All right, guys, other thoughts or questions? I appreciate all the comments, especially from Jim and Ida. But that's it for me, unless there's any other thoughts or questions. Kind of long-winded today. Sorry I didn't have more thought-provoking questions for you, but I just kind of wanted to give you an idea of what I have to do to walk myself through these situations that kind of suck. And really, it's just, if I could summarize everything I said, it's just to take a step back and look at the big picture and look at the long term. Trying to chase every wind of stock that gets hot here and there is just a losing game. And trying to index the market, knowing that you can't always pick the winners, is a losing game too, because the stock market doesn't always go up. And as Kevin so eloquently went over last Tuesday, averages are not your friend. All right, guys, I'm not seeing any more questions or thoughts. I really appreciate it. Um, Thank you for listening in as I babble on with my thoughts and whatnot. Yep, thanks, Jim. All right, guys, appreciate it so much. I'll have this posted. I'll probably fix some typos here and there and get it posted. But otherwise, appreciate you joining me. Take care. Have a good weekend.